Hey guys, welcome back to the channel. 2022 has had a rough start by any measure. Inflation is at near all-time highs, pushing up the cost of living. Russia has invaded Ukraine. The Nasdaq has had one of the worst starts to the year, and we're only in March. All this uncertainty, or FUD as it's often expressed on YouTube, meaning fear, uncertainty and doubt, is having a profound impact on the price of gold. But why does this matter, do you ask? Gold is more than just something we wear as bling. It also serves as a unique investment class by investors and central banks. Investors often use gold as a hedge against uncertainty. In other words, while everything else starts to look a bit the price of gold in many cases moves in the opposite direction. In this video we'll be looking into this further, evaluating the benefits and risks of gold as an investment, and how you too can invest in gold, as there are many ways in which we can do this. Make sure you watch this video right to the end, as the price of gold is now at its all-time high, and with an outlook of much more FUD to come, you don't want to miss out on this potentially lucrative investment. Before we get into it, please make sure to subscribe to my channel and like this video if you found it useful. If I missed anything, or you have any opinions you'd like to share, please make sure to comment below. I'll be replying to everyone that does. Let's get into it. Gold for centuries has been a treasured commodity for a number of reasons, including for its strength as a metal, its alluring colour, and its cultural significance. For example, a gold medal is given to the highest performer in their field at the Olympic Games, or for the Nobel Prize. We've also built a cultural significance around using gold in our wedding bands as a way of using value to represent our commitment to the relationship. In essence, we use gold as a medium to present value to another person. For thousands of years, gold was used as a form of money due to its universal acceptance as a store of value and its scarcity. Up until 1933, even the United States dollar was tied to the value of gold in a system known as the gold standard. Governments continue to hoard gold as a key pillar of their central bank reserves. Investors continue to invest in gold for its continued perception as a store of value, and people around the world purchase gold for its perceived value as jewelry. And that's the key in all of this, its perceived value. Gold derives its value entirely from the value we as humans instill in it. Sure, it has commercial applications in dentistry, medicine, and Salt Bay restaurants. However, intrinsically, it is simply a rock with very little use for the average person. Now, just like Bitcoin and diamonds, the value isn't in the underlying product, but rather these collective perceptions of value. And that is a perfect segue into the next sections of this video. So who are the main players in the gold market? The largest sector that trades gold is of course investors. Investors often use gold to diversify their portfolios, hedge against inflation and rising interest rates, and as a safe haven during times like what we're facing now. Gold is what is considered a safe haven investment class, or in other words, an investment that maintains a steady price even while everything else is going crazy. For example, right now there is a lot of fear and uncertainty around inflation, rising interest rates, and even war. When times are good, investors will have their money in stocks to benefit from the underlying performance of the companies they're invested in. When times are not good, as we see now, investors will be seen to rotate towards safe haven investment classes, such as gold or term deposits, to essentially weather the storm. These inflows and outflows can dramatically affect the price of gold, as we can see now with the price now surpassing $2,000 US an ounce. The second large sector is the jewelry trade, which uses gold to manufacture jewelry. There are two main factors here. The first of these is that the price of gold will directly impact the price of the final jewelry sale price. Consumers are generally price sensitive, particularly when it comes to discretionary spending, and as a result, the demand for jewelry is likely to therefore reduce as the price increases, and therefore the derived demand for gold will reduce as a result. The second is to consider that gold jewelry is often a ceremonial purchase for weddings and events. As we find ourselves emerging from COVID lockdowns, perhaps this could be a contributing factor alongside investor demand to the recent increases in the price of gold as the backlog of events begins to start back up. The third large sector is global central banks who have large stockpiles of gold to supplement their reserves of foreign currency. Previously, central banks held gold to back the value of the currency, as we mentioned the gold standard. However, it is now used as a sign of the stability of the central bank, its associated currencies, and the broader economy of the country. Just think about the Netflix series Money Heist, and when they reported the Bank of Spain had its reserves stolen, and the financial markets then collapsed. So the three largest players in the gold market are investors, jewelers, and central banks. Now let's see what are the pros and cons or benefits and risks for you when you invest in gold. Let's look at the benefits first. The first benefit is stable long-term growth. Now for thousands of years, gold has retained its value as a precious metal, and in modern times has had stable growth. Over the past 10 years, gold has increased in price by a cumulative average growth rate of around 1.7%. Now, though the broader S&P 500 stock index has risen by a larger 11.6%, if we look at individual stocks, this longevity is much harder to find. 20 years ago, the most valuable company in the world was General Electric. If we had invested in this company back then, today we'd have lost around 2/3 of our investment value. So what we can see is that gold has reigned supreme for thousands of years as a driver of stable price appreciation. The second benefit is diversification and wealth preservation. Now, any good investor knows to diversify their investments, particularly when they have a roughly negative correlation with one another, to hedge against portfolio volatility. What this means is that often when the price of stocks fall, the price of gold will increase. We saw this in 2020 during the virus, when the price of gold rallied from $1,500 to $2,000 in just a couple months. When stocks began to rally in late 2020, the price of gold receded to around $1,700 as investors moved their money from the safer gold into riskier stocks. This means that as a result, the value of your total diversified portfolio will generally have less wild swings up and down than a fully invested stock portfolio. The final point I want to cover around investing in gold is the protection gold provides against adverse events. Generally speaking, gold is known to increase in price when there is significant fear in the market and investors move their funds into gold. We're seeing this right now due to a combination of factors, including rising interest rates, inflation, and geopolitical tension. This can also be the case during recessions. While stocks are getting hammered, gold can provide a safe haven for investors. Now let's look at the risks. The first risk associated with investing in gold is that it does not come cheap, particularly if it's physical gold. Now, when you purchase your physical gold, you'll need to have it sent securely to your address if you live far from the seller. In addition, once you have your gold, you'll need to ensure it is kept secure, which may require the purchase of a safe, or if it is held at a depository, you'll need to pay for storage and insurance costs. Now, this can definitely add up, particularly for smaller investors where gold isn't the majority position in your portfolio. The second risk is liquidity and trade spread. Now, if you have physical gold, your ability to sell it for cash will not be as easy as, say, selling a share in Tesla or a gold ETF. To sell your gold, you may have to go into your local gold dealer or find one online and sell your gold at a discount to the wholesale price, also called the trade spread. This is generally because the gold dealer will need to pay for the storage, the security, and the resale of your gold, while building in their margin. You may also be able to sell your gold to other investors. However, there will be a cost and an inconvenience associated with this, as the other party will want to check the gold's authenticity. The third risk with investing in gold is the returns. Now, as we discussed earlier, the returns for gold may not have been as fast as for many stocks that have been popular in the market, such as Tesla. For some investors, this may disincentivize investing in something like gold. The fourth risk associated with investing in gold is the volatility versus other safe haven investment classes. Now, if we compare gold to something like a term deposit, gold is actually a highly volatile investment in the short term, and it can take many years to recover from lulls. For example, between September 2012 and November 2015, the price of gold actually fell around 40%. Now, despite being considered a safer investment class, a large amount of volatility should be expected in the short term as the price moves in cycles. For this reason, investors in gold should invest over a very long time horizon and expect a fair amount of volatility despite its record as a safer investment class. So if you have understood the above and are still interested in investing in gold, now I'll be covering the main ways to invest in gold from anywhere in the world. Broadly, there are 4 main ways to invest in gold, the first of which is the most obvious, which is buying physical gold. Now, this generally comes in 3 different forms: coins, bullion bars, and jewelry. The value of physical gold can differ by origin and purity, And here is a table from MoneyHub showing you the most common coins you can invest in. Each mint produces its own brand of coin, and the mint is either owned or authorized by the government where they're based. Each brand has a different set of denominations, measured in troy ounces, and the purity of the coin also differs depending on how the coin has been produced. It is important to note that the denomination weight measures the amount of gold and not the weight of the coin, so even though the purity may differ, the amount of gold will be consistent for similar denominations. You can also purchase gold bullion bars, which can range in size from 1 gram up to 1 kilogram or 2.2 pounds. In addition to the mints, refineries also produce bullion bars, and here is a list of some of the more renowned ones. The type of gold bars you see in movies are known as good delivery bars, which can weigh as much as 12.5 kilograms. However, at a current price of around $800,000, this is an investment for another video. And lastly, there's jewelry. However, this isn't suitable for investors as it has a low purity of gold and the price is greatly inflated due to the jeweler's craftsmanship in creating the piece. The second way to invest in gold is through ETFs. Now, ETFs provide a simple way for investors to gain exposure to gold. The ETF issuers generally back each unit or share by a defined amount of gold that they store at a secure facility on your behalf. This means that, unlike with physical gold, you don't need to worry about the miscellaneous costs of ownership, and you can easily sell your gold investment on the stock market. The gold owned by the ETF is regularly audited, so you can be sure that by investing in the larger funds, that there is an appropriate amount of physical gold backing up your investment in the ETF. The largest gold funds are the SPDR Gold Trust, ticker GLD, and the iShares Gold Trust, ticker IAU. And each of these are pretty large, with over $30 billion under management. The third way that you can get exposure to gold is through gold miner stocks. Now, not only can we invest in the underlying gold, but we can also invest in the companies that have mining operations in gold, based all over the world. Theory should have it that if the price of the gold increases, these companies should make more money selling it. Another angle is that a higher gold price will mean that less profitable mines might again become profitable to resume extraction activities. In the second quarter of 2020, the world's most renowned investor, Warren Buffett, made an investment in the gold mining business Barrick Gold, ticker GOLD. This was a notable move at the time, as Warren Buffett is on record despising the unproductive nature of the asset. By investing in Barrick, however, Warren is able to instead have exposure not only to gold, but to a company that is cash generative with real productive assets in the mining sector. Barrick Gold is based in Canada and mines gold and copper in 13 countries, and was previously the world's largest gold mining company. Other gold mining companies include the current world's largest gold miner, Newmont, ticker NEM, Franco-Nevada, ticker FNV, among many others. There's also the option to invest in a range of gold miner ETFs, which is shown here, and what that allows you to do is to diversify into that sector. The fourth and final way that you can invest in gold is through a subscription plan. Now, depending on the country you're in, this basically allows you to dollar cost average by making regular payments to a gold trader. An example of a company providing this service is Bullion Vault, which manages over 100,000 customer accounts with a combined $3.8 billion value of gold under management. They charge a $4 storage and insurance fee every month, and a 0.5 commission over wholesale price to purchase gold. Also, should you ever wish to physically take possession of your gold, they can also send this to you. So there you have it, guys. I hope you enjoyed this video and learned more about investing in gold. If you did like the video and would like to support this channel, please make sure to subscribe down below. It really helps out the channel and ensures that you'll be the first to know when I release new content. Take care, and I'll see you on the next one.